Webcam's not working. Frustrating. No, you're not going to see me today. Not sure why that's not working. Anyway, I'm here. Trust me. Good afternoon, everybody, and welcome to this edition of Live Market Analysis. My name is Carl Capolingua. I'm the Market Analyst over here at ThinkMarkets Australia. It's a pleasure to be with you as we do the macro, that is indices, commodities, forex and crypto, to help give you a better understanding of how these factors impact your portfolio, but also potentially to find trades in any of those asset classes. Pretty simple format today. Over to you. Find the Q&A window in your Zoom platform there, or if you're watching me via YouTube, LinkedIn, Twitter, or Facebook, or not watching me because my camera's not working today, please send those through and I'll give you my best technical and fundamental analysis reader. All right, let's head over to the Amy broker here. And on screen, just pure coincidence, it's what I was looking at before we started the presentation, happens to be lithium hydroxide, which is one of those key lithium minerals. And if I change the chart style here, we can see that we've had a little bit of a bounce since our last update. Very small one from a low of 40, I want to say 42.75 there, up to yesterday's close there at $45, and that's after a rather precipitous fall from 83.88. Is that it? Is that the low? Can we expect lithium prices to recover from here? Well, I would suggest, just based upon the probabilities associated with the chart we can see on screen, probably not. Not to say that we can't see a rally, but the overall trends are still down. If anything, when you see a fall that severe, the likelihood does pivot more towards the trend continuing. Okay, it's not exactly a gentle downtrend, it's a very sharp one, so we know there is significant supply in the system. So look, I'd be looking out for that. Now, these are not predictions, these are just showing you where you might find some problems. And I would suggest that the problems are probably going to be in and around that zone there. Not only will it be where the short-term trend ribbon, that is the 21 and 34 EMAs, catch up to any rally in price, but also around that run number of 50, we could have a problem. Unfortunately, we don't have candles here, so we can't say, well, supply is clearly manifesting itself in that zone with black candles and upper shadows, but it is a point to watch for another A-shaped pivot in the price. Lithium carbonate hasn't traded this week, and looking at this here, we can see that it was in its own little rally there at the end, and we've had 3 days of public holidays in China because of May Day, so it will be literally trading today. We'll get an update from tomorrow. So for the lithium bulls out there, can't give you a great deal to cheer just yet, but hey, it's stop going down for the time being. Let us maybe continue in this sort of commodities bent at the moment. I've got a couple of requests coming through from Carlo for gold and copper, and we will head here. Let's do gold first. And I do need to change my chart back to candlesticks, and we could see another nice move last night on gold. Closing towards the high of the candle. I know that might have changed since the close. Spot gold continues to trade, and I'll check that for you in another platform in a second. But look, let's just take this at face value for a second and say that all is looking good here based upon the official close there, and I'm pretty sure that'll be 4 p.m. New York time. We have 2049 as a short-term point of supply that needs to be dealt with. This is a point of supply over here, POS, and I don't think that 2049 is the real point of supply. I think the real point of supply is over here at 2070. I just think 2049 is the first manifestation of supply at 2070, and then 2070 really is only a shadow, or an echo is probably the best way to put it. It's an echo of that high back here, which is actually 2073 for your reference. So it's all happening at roughly the same place. When we get a pause in a state of excess demand, which is what we had prior to that pause, then it all makes sense to me. There's nothing untoward going on. So it's a logical place for there to be supply. So that's the first thing. I wouldn't be too concerned about this level. What I want to see is how we respond to it. And look, very shallow pullback. through here. Lots of lower shadows, which is very important. Don't forget, lower shadows just indicate a transitioning between a small bout of supply here, of excess supply, into excess demand again. So lower shadow, lower shadow, lower shadow, white candle, lower shadow. That one doesn't count. Lower shadow. That one doesn't count. But we're seeing far more lower shadows. And then the confirmation here that we're not just taking control from the demand side, but demand side has control and following up here. So it all looks very good. I can't fault it. There's nothing in here which tells me that I shouldn't be long gold or flowing back to your gold stocks. I think I'd rather be long gold, to be honest. I think it's just a cleaner chart, a more obvious place to be if you think gold is going up. And if you do think gold's going up, then it's very easy to head to our trading platform over here, and literally you just type in gold will do it. But you can see there's a few things going on there. Just imagine all the gold stocks we have on the platform. Probably the best way to do it is to go something like spot gold. Even then, it's not appearing in the top 5. You can see it is there. It's just down the bottom. But the code, and it's quite a commonly used code for spot gold, is XAU. AU standing for gold, X standing for spot, and then obviously it's trading against the US dollar, and that's going to get you there straight away. And then you just click on information here, and it'll tell you some information about the contract sizes, the margins. Best way for I think to do it is to go here, dial the size of the contract down as small as possible. That's the best place to start. And you can see that for each pip move, it's going to cost you, it's going to make you or cost you 15 cents Australian, because my account happens to be based in Australian dollars. And if you're unsure what the pip is, the pip always on our platform is the last of the large digits in the quote. So we can see the quote is 2042.30, 33 cents US. It's always changing, versus 2042.56. I know it's always changing. We see there's about a 20 cent spread. In fact, it's confirmed there. So it's a very narrow spread. Think about the percentage that 20 cents is on 2000. I'll let you work it out. You need about $150 to do the trade. And then, obviously if you have a view that gold's going to, let's say, $22.50 an ounce, that equates to $310 profit. But if you wanted to set your stop loss, I'm just going to flick back to the chart here and look for a suitable place to set a stop loss. Well, clearly below 1969. And I want to go, at least 0.5% beneath that. So we head back to here and we say, that's going to be about $10. So 1959 is probably a reasonable place to do it. So we go 1959 in here. We can see that we can, set up a really sensible trade, I think, risking $124 Australian to make $310 Australian. Well, of course, depending on wherever you think your target is 22.50 possible? Let's head back and have a look and do some prognostications. Well, often what you'll do, we know that this is your big supply zone in here. And what you can do is a measured move. So you say, well, what was the move into that supply zone? And you can see we've come here from roughly 1800, let's just use round numbers, and we've hit quite literally 2050. So that's a $250 potential move. And we usually take that measured move, I do, from the bottom of that consolidation zone. So it's going to be 1970 plus 250. And you can do the maths on that. 1970 plus 250 is going to be 2220, doesn't it? 2220. So not that target estimate there, potentially not unreasonable if we get this move replicating itself. Let us go to, actually while I'm there, let us talk about silver. I will get to your request for copper, Carlo, but it makes sense to talk about silver while we're talking about gold. It's a very similar chart. In many ways, I think it's better. I like the lower shadows through here. I think they're far more clear cut. Signs of demand in and around that 2450 zone. You see each time we push down there. And don't forget, those lower shadows represented at one stage a black candle. And the only way you can have a lower shadow is if you don't do that. The only way you can have a lower shadow is if indeed you do have a black candle at some stage. So let us just investigate this just for a second, because let's think that if this is our candle, and we're saying it's an intraday candle, so the market has not closed yet. The only way, so let's label this as intraday, that day, and this is by the close. Okay, the only way you can get from this candle here, the intraday candle to the closing candle with a lower shadow is if that close, obviously it was there at one point, but then the demand started to come in. And what that does is it creates a little lower shadow. Okay. And then there's a little bit more demand that comes in. And we know that's happening. It was around about, in terms of price, 24.50, right? So the price pops down. It might be on this day here. Okay. Maybe that one there, or that one there, or that one there, or that one there. Okay. This is what we're talking about over here. Okay. So as the demand comes in, you can see that shadow builds and builds and builds and builds and builds. And if it builds enough, you look at that last red arrow I've pointed to, you can actually get a situation where we surpass the opening price. Try and draw this as accurately as possible. And we actually turn that black body into a white body. Okay. So you can see that shadows really demonstrate, in a transition from excess supply to excess demand. So black candles are excess supply. It's very clear, but you can see how we change those black candles into lower shadows. So I like this, and I think equally you could be long silver, and lo and behold, you can also do that here. And we know now that X is for spot, G is the chemical code for silver, and then it's versus the USD, and you'll find it in there. Silver is a slightly larger contract than the gold one, just the way the contract sizes work at the COMEX exchange, which is what our futures contracts are based upon. And typically you need thousands, if not tens of thousands of dollars in margin to trade these things on COMEX, and you can get into these things for just a few $100 margin with us. Okay, let's head over to copper now, and probably should have stayed there because I want to head here and here, and this is where we're in the trading view environment now. That's Brent Crude on screen, and definitely if you had followed this over the last few weeks, we were looking for some cheeky longs through here, and even through here, I mean, there it looked great. Happy to add risk there, and look how it just peeled off. So you would have got tagged on that one, no doubt, if you'd listened to that. But there were some pretty good indications from the candles that you wanted to drop that trade pretty quickly. And look, while we're here, we might as well discuss some of those. I think we might have actually looked more closely at the crude oil chart, but certainly as we push through, try and get it, there we go, through that low there, and that would be, for me, a great indication that you would want to minus 1/3 of your trade on that. And then you can see this little move through here. So if we say that we are doing this, okay, and you can see pretty clearly here what the price action is. And through here, we don't know where that last arrow is going to end, but the next point would have been through here as your next minus 1/3. And then if you had, I don't think we would have built up a full position at that point. There's your next and your next third again. So pretty clear, I think, my model telling you how you need to behave in the market. So yes, getting in is one thing, but getting out, I think, is far more important. So where does that leave us with Brent Crude? Well, so for some people, this exit of the cheeky longs would constitute actually the initiation of a short trade because of that longer term trend. And it's the reason why I said it's cheeky, because we are fighting the long-term trend. We're betting on that long-term trend changing. Well, guess what? That bet didn't pay off. The long-term trend reinforced itself. So if that's the case, then you might actually go more aggressive on that minus 1/3. You might actually turn that into a short trade. That's called a stop and reverse. If you've ever heard that term in trading, we stop the trade we're on and we reverse the position to take advantage of the that longer term trend. What would we do now? I don't see any reason why you would cover back your shorts just yet. We're at a bit of a level. It's $70. It's a round number. Certainly we've seen excess demand in this zone in the past. This is clearly a point of demand. It's clearly a point of excess demand. And I think it's a point potentially to be reckoned with. But we're not seeing demand manifest itself in the market just yet, because remember, demand manifests itself as those long lower shadows. Do we have lower shadows? No, we've got almost a full black candle. Now that's the 3rd of May candle, so that candle is closed. That's official, and really we'll see tonight whether that demand does sneak back into the market. If you were to see the lower shadow and the white candle pop in, now that's your signal to start closing out those shorts. Okay, not to go long because of that long-term trend. I don't think there's enough in it to go for a cheeky long there, but certainly to start closing out your shorts. If you don't get that lower shadow tonight, if it's another big black candle, there is no demand there, quite clearly, and you would maintain your shorts. I know I came here to get to copper for you, Carl, and that's where I'm heading now. Got there eventually. Copper was one you can see there at roughly at the same time. We had some weakness in the US dollar. The hashtag banking crisis had cooled down a bit. Rates had pulled back, and some of these commodities were rising. And since then, we saw rates did pop up, kind of killed some of these trends, and obviously killed that Brent Crude trade, killed the copper trade there. That one is dead as well, dead and buried. If you're still in it, I can go a hold on the basis that this candle here, let me point it out to you, that is good for all the reasons I've discussed already. And actually this one here is pretty good as well. I'm going to say that given that says 4th of May, that's a live candle, so take that with a pinch of salt. But if we can close there, then potentially it is banging out this area here. And what's that? There we go. Want to go here and draw my rectangle. And this area here is definitely acting as an area of demand so far. Okay, so as long as that holds, I think you can maintain your long position if you haven't already exited it. But if you were to see the price then to trade close beneath that level, so let's say clone that, then beneath here, you would be looking to exit that long position as well. Okay, don't want to muck around too much with that one. Where could we buy it if we were that way inclined? Well, it would at the very least, need to trade above this little peak through here, this little point of supply, okay? And we'd want to see a pretty nice candle there. So a nice big white candle closing above that high. That high there you can see is 399.8. It's around it. Let's call it 4. So close above 4. And really then you would have to be a sucker for punishment because, again, it was cheeky, it was early. Do you want to go early again and try and pick this great next big bull market in copper if it ever occurs? I think really copper's telling us we're stuck in a range and there is still a very high risk, I believe, that we actually just crack to the downside and head into, if we do crack there, 375-ish, 355-ish and 340-ish would be the next downside targets. Okay, could you short it on a close beneath I'll get that low for you. It's sort of 381. Could you short it on a close below 381? I don't see why not. Okay, let's keep moving. So, unless you're gold right now, anything risk on related, anything that's relying on global economic growth is looking a bit sick. That's your message. I will get to the next list, but just looking at iron ore, there's another one there. So you can just see how sick iron ore is looking. And the big problem for iron ore is that when you have, a sharp drop like this, and you don't get, a similarly sharp rally, but you just sort of plod along the bottom there, the probabilities of another move down are very, very high. Okay. We all know that one of the oldest rules of economics is when prices drop, there should be more demand because, quote unquote, the perception is it's cheaper. We just haven't seen it. Prices have dropped, and yet the market isn't perceiving this to be cheaper. That's a problem. Supply is still very much in control, and demand is very, very reluctant to commit. That's what those candles are telling you. So if supply is still in control, demand is still very shy at this point. Probably much lower prices are required to stimulate that demand, to draw that demand into the market and create a low which looks more like this. This is the low you'd rather see. So you can see how lows that work. They are white candles. They are sharp. They are V-shaped recoveries. They're the lows that stick. The lows that, there's a little one there to be fair, but the lows that sort of don't stick, but just sort of just just death of 1,000 cuts around the bottom, they're the ones that are likely to continue to go down. Okay, let us head over to Perry. Perry has some FX for us to look at. And if you're not sure what FX is, stands for foreign exchange. And really one of the deepest, most liquid markets, if not the deepest and most liquid markets in the world. You've got just the tiniest of transaction costs, huge leverage amounts that you can utilize there to use a very small amount of capital to control large amounts of capital. So if you're not trading FX, it is a great place to be. And Perry's asking about the GBPCAD, which I must admit I don't have on here, but it's not hard to get. If I go into here, GBPCAD, whoops, is that CAD is going to pop up. Obviously, it's not a stocks. We can go there to Forex or even probably futures, and we're going to get some. Maybe I thought we might have got some there. But Forex, any of those will do. Normally don't like to come in here because I can find an independent one, but I'm kind of tagged on this one, aren't I, Ferry? Thanks very much. Using a competitor's price there. But we are looking at a really nice trend here on the GBPCAD. Look, it's not dissimilar to the GBPAUD. Okay, in fact, it's even better. How about that? Or probably even the GBPNZD. It's even better than that. So you've got the pick of them there. And I'm guessing that's interesting as well. But that is not heading further north there. Okay, so GBP, CAD. Yep, going to give you a big tick on that one. Looks very good. Let me just zoom out a little bit, see if I've got any other big points of supply in the market that I need to contend with. And I don't think that's the case so much. Where's that thing there? Template. Let's say that there is probably a little bit of supply up and around that area. And that would be the only thing that would prevent you from maybe going long right now. But if you're already on that long trade, Perry, 100%, you would continue to hold it because everything looks good about it. So the short-term trend, the long-term trend, the price action is exemplary here. So by that, I mean, it's not going to let me draw that one without letting go of the arrow. And by that, I mean the move through here, the very shallow pullback through here, and then the resumption of that short-term uptrend. And the important thing for us is that the last point of supply through here is now acting as a new point of demand. And when I see that, I get very confident that the market is doing what it should be doing. So that's our point of supply there. And if we move that to where it's supposed to be, see, I'm not as good at drawing in this one as I am in the other one. There's our point of supply. And then we can see how it has turned into our point of demand over here. So 100% hold. I'm happy to add some risk, really, but just watch out for that point of supply up here from 173.80. Perry's next potential trade there is the CADCHF. So it's probably going to be heading in, I click that CADCHF, probably heading the opposite direction now. There we go, heading down. And that's another ripper as well. Just understand if you're going to take both of those trades, Perry, you don't really have two trades. You've effectively got the same trade split over, two portions of risk. Just understand that. That's all. I'm not saying you shouldn't do it, but effectively we're shorting the Canadian dollar against two different currencies. It is possible that the Swiss and the sterling independently are moving on different themes, but you're still really short the Canadian dollar, aren't you? So, but that looks fantastic for a short. I really can't fault that. And yeah, I think that's also an add risk. And there are plenty of opportunities, Perry, through here based upon my model to do that. Just zooming out, is there anything, see, this is probably a better trade because there's really nothing in recent history holding this one up, is there? So this is probably the superior of the two trades. but both look very good. Ben's asked about copper. I've done copper, Ben. Not sure if you caught that earlier on. I hope you did. And David is asking for the NASDAQ. Let's head back over here and have a look at the NASDAQ Composite. Some people look at the NASDAQ 100, as the name suggests, the 100 biggest NASDAQ stocks. I prefer to use the Composite because it has just over 5,000 stocks in it. Therefore, it's a much broader measure of the NASDAQ, tech stocks mostly, but it's still a widely represented index, the NASDAQ. Not looking as good as it was a few days ago, unfortunately, David. And we know the reason why. It's all about hashtag banking crisis. I'll show you a couple of charts on that in a second, but let me do the analysis here first. Obviously, the long-term trend, we feel, if you've been listening to these sessions, has swung back to up. We're just waiting for some confirmation. That confirmation for us is coming on a close above 12,270. It's what we really want. And the market's not giving it to us. We've gotten really close on a number of occasions right here. Even having a look at it on these two sessions right here, we had a look at it, and the last few sessions here, we've had a look at it, and we just get repelled each time. There's a different reason each time. But 11,798 is still higher than 11,635. 11,635 is still higher than 10,982. So that's encouraging. We should still expect, despite hashtag banking crisis, that we're going to see some demand coming in and around the current area, around 12,000. That's the Leica end zone. It is a dynamic area of support typically. The long-term trend is the next area of support. That coincides with 11,798. So in terms of the trends, look, flat long-term, up short-term. Price action is mixed. You can see it's a little bit all over the place with, let's call it higher peaks, but lower troughs most recently. We're compressing in a range, and that makes sense. That price action could compress underneath a key number like 12,270. Then we switch to candles and we say, well, there's a lot to like here. I mean, there are plenty of white candles in there, but the last two candles are giving me significant cause for concern, as did, I should say, these two candles here. And typically when you see two candles like those two, and let's call this pattern A over here, because I'm going to call this pattern B, they are very similar, aren't they? They're very similar. So, supply side candle followed by a really confirming supply side candle. You're looking at a pattern like A, there's an extremely high probability that the next session should be down. It didn't happen. For whatever reason, it was up. Nothing is an exact science in anything, I would suggest. But probabilities were on the side of it for, well, bonus. We got away with that one a little bit. So two strong demand side showings. I have to say candle B looks just as bad as candle A. So candle B deserves a high probability that tonight is going to be another down night. And I hope we fluke. I think that was a fluke. We fluke a couple of white candles out of here and still go push out and break those highs. But I'm going to say, based on what I can see in that chart, that is not likely in the next candle or two. Now, candles aren't predicting what's going to happen 3 weeks from now, 3 months from now, or 3 years from now. Candles are giving you predictions of what's happening in the next candle. Okay. If I had to give that a score out of 10, I'd say 5.5 out of 10. It's just still on the side of more likely to go up. Look, maybe I'm being a bit harsh there. Maybe it's a 6 out of 10, but those last two candles do concern me. And I think if we can get a nice big white candle above 12,270, we're going to see some FOMO come in. How is that possible? And this is when my brain ceases to function. And it's because of this. I can't see how, and as well as the NASDAQ's done, I can't see how, there's the Russell, that's in a bit of trouble. And as we come down the list, I'm going to skip the S&P 500. This is where the problem is. And I've said this to you in these sessions now for, we're in May, and I started saying it around the end of March after the banking crisis broke, is that if there is going to be a problem for this new bull market thesis on the NASDAQ, it's going to come from this chart. And why? Well, hopefully you've already spotted it. That followed by that. It is a pattern. And I want you to go and find these patterns, and you will find that more often than not 100% of the time, not 100% of the time, they do that, right? But it's going to be 6. You're going to find 60 times out of 100. You're going to find 70 times out of 100 This is what happens when you do, let's call it the green arrow. Okay, so if that's the green arrow, okay, when you see that sort of a move after the first red arrow, okay, the probability is substantial. I probably could have just turned that into the green arrow. Let's turn that into the green arrow. So if you see the green arrow after the first red arrow, then the second red arrow has a very high probability associated with it. And this one is the larger of the banking indexes there. Sorry, larger capitalization banks within the index, the BKX and the regional banks, obviously the smaller cap stocks. I put out a tweet earlier on today, and I can show you the list again because I know we're not specifically talking about stocks today, but if you didn't see my tweet, go have a look at the tweet. But just to give you an idea of how some of the charts, I mean, that's probably one of the better charts out there actually, how some of the charts in this sector look, in that regional banking sector, and some of them are horrific. So, you know, that's an algorithmic chart. If we go to log, you know, you start to see some of these percentage moves now, how they come into play. And, you know, you're going from 38 down to 15. You've lost over half your value in just a couple of months. Something's not right. Something's not good here to see these sorts of moves. And some of them are just terrific. So that's, again, another 50% of there. And I'm really concerned about this. So as much as I do want that NASDAQ to break out, create a FOMO bull market, they're the best market to make money in. This stuff worries me right now. And we can keep going on and on and on. And there are some absolute shockers in there. I think some of the haters, look at that. I mean, that's and look at the candles at the end. It's not like that we're seeing white candles and lower shadows. We're seeing black candles and upper shadows. There's still more to go here. That one there, Home Street. That's going to be in the news real soon. You're going to start to hear the media talk about Home Street Inc. I don't know what they do. I don't care, but they're done. They're dusted. They're not going to make it through this crisis. That one probably as well, Harbour One. So you can look at these charts, or you can not look at these charts and be surprised every next bank that goes under, or you can look at these charts and say, well, I saw that one coming. So to be forearmed is to be forewarned, ladies and gentlemen. David's also asking for the Hang Seng in Hong Kong. Let's head back over to our indices list. In fact, I was there already, and click on that. I think maybe David looking at this for a potential short, I'm guessing, and it's not far away, to be honest, because it has just sort of popped back beneath that low there. I'm not sure if you'd rather short this or short any of those banks I just talked about. And many of those banks are on our CFD platform, and you can short them. This one I'm going to put in the little bit too hard basket if you are asking about a short here, because I'm pretty sure you're not asking about a long. It's almost in the impossible basket for a long. But I can see what you're looking for. I can see, you know, that the congestion in the trend, the long-term trend, short-term trend, and would look like with that second from last candle failing at that zone again and pushing to the downside. I can't see what it's doing today. It's probably opened recently and maybe pushing lower. That's yesterday's close. But certainly, if, you know, I'd say if you get another big black candle through here, or any black candle that closes on its low below 19,521, you could add a cheeky minus 1/3 to that. And I'm saying add minus 1/3. I know for many people that might confuse them. How can you add minus 1/3? No, if I haven't drawn a plus 1/3 before that one, it means going short here. Okay. And if you are new to these sessions, you need to get your head around going short. You can't be that investor that only believes markets will go up. That is foolish, ladies and gentlemen, absolutely foolish. You need to understand how to short. If you're not shorting the CFDs that we offer here at ThinkMarkets, is the best way to do it. Jay asking for Microsoft, Amazon, and Google. Jay, sorry, I can't do those because that's not where we talk about them, but tune in tomorrow at 12 p.m. Australian Eastern Time. So Sydney time, Google it, whatever that is, Jay, if you're tuning in from overseas, and I will do those US stocks for you, Microsoft, Amazon, and Google for you tomorrow. Haneli asking for the FTSE, which I'm curious, Haneli, what are you doing here? What are you thinking about this one? Because I don't think it's an obvious long with the big black candle and the shallow response to that supply last night. I know the short-term trend is up. I know the long-term trend is up, but the candles and the price action lower. Let me point them out here, because I know you're all over this, and Ellie, you're already doing this sort of stuff. Falling points of supply, black candle, looking a bit dicey here on the short-term trend. I know the long-term trend is up, but I wonder, are you looking to go long this, or are you looking to short this? I don't think it's a short though, because there's still too much momentum to the upside. There's still too much demand in the system. And if you don't believe that there is demand in the system, just think about who was buying on these days and whether they're just going to run away from that commitment to buy. Are they just going to spill back out of the market? So I think there was plenty of commitment to the demand side through here, and you're going to fight that commitment all the way down. So I don't think it's a natural short, and I don't think, based upon the candles, we can go long in line with the short and long-term uptrends that are in place. I've got IEU Europe ETF for John. Now, again, that is a stock, but given it is also based upon an index, I will entertain it in this session. And what I can do is, if I go, it should be in here somewhere, my Europe 100, and maybe you can see it, you're probably shouting at the screen, hey Carl, there it is. I'm sure it was in there, but I can't see it now. I've got the Eurostoxx 50. Would I short that? No, I think that's still very strong. Let me just, Europe ETF. No, I can't tell you exactly what that's based upon there, but no, I can't see a short in that one. I can't see a long either, because the candles at the end don't allow it. Okay, plenty of people here. Really good turnout. So it's good to see so many people starting to take some interest in the macro. If there are no further requests, however, we may adjourn. So send them in, or forever hold your peace until next Thursday. How's that sound? What we haven't done, and it's we've done lithium, John. We did it at the start, so maybe catch the recording. I won't go over that ground again. Something we haven't done is probably the most obvious one of them all, which is the ASX 200. How does all the macro we've talked about to date relate back to the local market? We did do iron ore, Carlo, and we said it wasn't looking very good. Okay, so let me update this to get you the latest candle. That's going to happen in the next 30 seconds. But while I talk about it, we can see that, at least on yesterday's candle, we have hit that key area of demand from the dark green zone, the long-term trend ribbon. And we would naturally expect that long-term trend ribbon to offer a little bit of support, a little bit of excess demand. And it is. You can see yesterday's lower shadow. You can see today's lower shadow. How about that? I can't make this stuff up. There is some demand coming in around that zone. It's a little bit feeble, though. You can see today's candle is very small. The body is still black. And it's a very limited demand-side response, I would suggest. So if we can close here or better, perhaps it facilitates a somewhat of a rally into the short-term trend zone, which unfortunately now is not going to act as dynamic support, but probably will act as dynamic resistance. And as you can see, I will have to change the color on this one if I want to do any analysis. And I would have to then line it up. This is how labor intensive. I don't do this. I do this by typing in a number later on. But you can see that we could possibly have some problems in here. And again, these are not predictions with the arrows, but these are just highlighting places that you want to be extremely observant. Okay, so it is going to be in that pink box there that you will watch like a hawk, the candles that appear. Do we get white candles in that zone telling us that, no, we're okay, market's not afraid, we're heading back up? Or do we get black candles and upper shadows in that zone that tell us, you know what, the little bounce you had, that's all you're getting. And in fact, supply is now piling back into the market. And that would be a problem. We could see a breakdown here. We could see 73.92 confirmed as a major point of supply, lower than 75.68. And then it does put at risk 68.95 down here. Okay. And 69.05 there as well. And I don't even want to contemplate what happens beneath that. We've got some problems here on the ASX. It's not a foregone conclusion that we're going down, but there are some issues there. We have done gold, Brett. We've done it earlier on. You might have tuned in a bit late. You know what I've neglected this whole time, and I apologise to my streamers, but my streamers haven't asked me any questions anyway. If there is something that you might have missed, the recording will go up on YouTube. Natural gas from Haraju. It had a little bit of a blip there, didn't it, Haraju? It kind of looked okay for a couple of sessions, but it's turned down with the broader move in crude, and I just don't think there's anything here that we need to do on it just yet. I know we're kind of waiting for something to happen. You can see the price action I've drawn in the past. It's been really flat. The candles have not been, full white, convincing candles, and it really is that full white candle, dare I say, one that looks something like this that we're waiting for. So let me point to the one now that you're on the same screen as me. The one, we kind of want to see something that good in and around here, and we're just not seeing it. Very, very flat price action, and candles that really are not convincing to the upside. So it looks like a bump around the bottom for the foreseeable future for that one, unfortunately. Okay, might adjourn there, ladies and gentlemen. I have certainly answered everybody's questions. And if we head back here, just a reminder for Jay, who asked about those US stocks. That's tomorrow, and that's going to be fascinating tomorrow, I think, just trying to understand, because we've been buying. Generally we've been looking to add risk on US stocks, and it'll be interesting just in the space of a week to see how some of our trades are going in the light of this renewed #banking crisis. So definitely tune into that. If you're not already registered, you should be, and you can do that at thinkmarkets.com/au/webinars. If you're not a client of ThinkMarkets, you should be, and we are certainly the good guys in the Australian broking space, where I just think it's so amazing that you can trade your good old plain vanilla shares, have your old-fashioned long-term portfolio on one side, with a great rate and chess sponsorship. No fees to put your money in, no fees to take your money out, like so many of our competitors. That's the model they're going for. They're going for lower commissions, but charging you an arm and a leg to put in your money and take out your money. I think that is absurd, and I hope you are smarter than that. But you can also trade your CFDs, your FX, your indices, your commodities. Everything we've talked about today is tradable on the platform, and it's commission-free on your CFDs. We're an award-winning broker. We've got offices all over the world. We're regulated all over the world. You can count on us to give you the best platforms and, of course, a dedicated account manager as well, the best customer support. Speak to somebody, not chat with them over a bot window. If you like what you saw today, then please hit the subscribe button to stay notified of any of my future updates, and also hit the thumbs up button. Let me know you like what I'm doing, so continue to do more of it. It has been an absolute pleasure chatting with you today. Hopefully you're still on the right side of the markets. All the best until we catch up again. Bye-bye for now. Look, before you go, don't forget that everything we've discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of that general information, consider it carefully or seek the help of a financial professional. You can learn more about ThinkMarkets and our products by heading to the website and downloading our product disclosure statement.